when I was in Europe, it fell by 200 and down to like 29 or whatever it was, and shot right back up and came down, shot right back up. And yeah, we did see pretty dang close to a 200. I mean, it touched it in the middle of the night, 3,500. We're at, like 33, 30 plus right now, up over $40. And um, that volatility is there for a reason. Volatility keeps people sitting on their hands, not making the decisions. This is a game that is being played at the highest levels of the LBMA and COMEX. This is a game that is being played with sovereign nations and central banks and commercial banks that are trying to, I think, prepare for what's coming. And um, there are a lot of these institutions, a lot of these hedge funds that are on the wrong side of the trade and maybe are doing whatever they can to get out of it and to reposition. So I wouldn't pay any attention to this volatility. Take a step back, look at the big picture. And I don't mean to underestimate it. A $200 drop is a lot, but $40 move up today is just over 1%. $100 drop yesterday is 3%. Is that really that big? No, it's not. It's 3%. Yeah, you don't want to see that day in and day out, but it seems like we're going two steps forward, 1 to 1.5 steps back, and it keeps going higher, base building. And that volatility, the only time people who choose to look at gold a certain way, the only time they notice it is, oh yeah, it fell by $200. But it's psychological as far as I'm concerned, and it keeps John Q. Public from crossing the Rubicon from traditional assets into things like gold and silver. And I think the people that are controlling the price and ultimately controlling the destiny of where this goes understands that. They want to reposition, but the futures market allows them to paint a narrative that keeps most people, misdirected into other asset classes, and that plays right into the hands of the big money that is quietly repositioning. As I truly do believe we are seeing a reintegration into the monetary system. I truly believe that. It won't be easy, but it will outperform everyone's expectations. When you see it fall like that, don't lose sleep. You'll see it come right back. I would venture to say, who knows what it opens up at tomorrow, but up $41 after falling nearly 100 today, or 80 today. So it fell by 80, it's up 40. So half of the fall today has come back in the aftermarket. No one's paying attention. Everyone's looking elsewhere now, eating dinner and not paying attention. Your people are, and I am, and you are, but don't let it get you down. This is something you have to understand as someone who sees the bigger picture. Don't let the bull throw you. That's what they're trying to do. The bull wants to take as few people along for the ride as possible. Doesn't bother me at all. It's annoying, but it shouldn't bother you. It's just part of the game. Where are you going to go? You move from one asset class to another. Gold is nowhere near overvalued. It has no retail participation. No is not the right word, but minimal. And what asset class in this environment of low interest rates that we've seen for 25, 30 years and easy money hasn't been distorted to the upside. So it's not, it was 37 to 1 or so in 2011. Ironically, I was fortunate enough to tell people to sell their gold to me and buy silver in 2010. The first podcast I did, YouTube with Big Swear, and it was 85 to 1. The second or third time in human history had been that high. And 7 months later, it was 37 to 1, just below its 200-year average. It's been stuck up in this higher range for the last several years, but for hundreds of years, it was 16 to 1, thousands of years. And then, for the majority of the last 150 years, it's averaged closer to 42 to 45 to 1 than it has up in the 70s and 80s. And seeing it at this level right now, this is rarefied air. Typically, anytime it gets near here, it slingshots down. So yes, I do. When it's coming out of the ground, it's 7 to 1. That has to tell you that at some point, these numbers are just flat out uneconomical. It's mathematics. It doesn't work. So yes, I do. But, the old adage, the market can be and stay irrational longer than you can stay solvent, has been prevalent for a while. But one of these days, we'll wake up and see silver no longer being suppressed by the Western paper game, because there's just not enough physical to back these contracts. And then the physical market takes over on a real price setting mechanism, which I think will ultimately migrate eastward to Dubai or Shanghai or to the BRICS exchange, which they are building right now, you will see price setting at a whole different level by the countries who have spent years playing the long game and accumulating, who understand commodities and things like precious metals, and will then you'll see the price really reflective of that. And I think the world is tired of the charade that the West has allowed to happen with asset prices, because it's controlled, where they can make oil negative $40 a barrel. Really? How the heck does that happen? Well, that's because it's controlled by the futures price. It's the tail wagging the dog, and the futures price has turned into a speculative endeavor. Anyways, it's turned into a speculative arena rather than one where it's about hedging risk and exposure to those who hold the real commodities. So it'll change. And yes, I do think it will, and probably lower than that. If you said it was single digit, it wouldn't surprise me. Ultimately, it wouldn't. It's coming out of the ground at 7-1. Put the ratio at 9 or 10-1, and that's logic. And ultimately, maybe lower. So yes, I do. I did see an interesting podcast with Mike Maloney yesterday, and he was talking about when the dollar was backed by gold, it was only backing M1. M1 is the currency in circulation. M2 is largely credit. It's roughly 92% credit. That would be the money in your savings account. It's on it's a digital number, and it's a promise of the bank to pay you in in Federal Reserve notes. But until it crosses over, it's credit. And the way that what he said was, well, his prediction was $10,000 an ounce gold by the end of the year. Or I'm like, wow, that's crazy. And the way he came up with it, and he laughed. He said, this would be my high-end prediction. He said, you take M1, which is just the currency, right? 2,365 billion in Federal Reserve notes in circulation. And you divide that by the 261 million ounces we supposedly have, which haven't been audited, ironically, and that's $9,044 today. And he said, well, the Fed would want a little bit of wiggle room, so they'll make it $10,000 an ounce. If that were to happen, it wouldn't be that crazy. But what he would then be saying is that the currency is then redeemable by gold. And I don't know that will happen, because de Gaulle from France proved that redeemable or convertible currencies convert. Maybe it would, maybe it wouldn't. I don't know. I think Judy Shelton's premise is probably more likely, where they back the Treasury with it. But Mike's, I would say people should listen to Mike's podcast. I found it to be really, really interesting. Divide the 2,365 billion by 261 million ounces, and you get $9,044 an ounce. So anyone who walks into the bank with $9,044, or by Mike's estimate, 10,000, would then receive an ounce of gold. Would it happen? Don't know. The banks aren't prepared to do that. Don't know what the mechanism would be, but I think they're going to reintroduce gold into the system, and whatever the mechanism is at that point is anyone's guess. I mean, I'm bullish on platinum, but it would be third in line behind silver and gold to me, and maybe not in that order, but it would be third. I think you should own some, but I'm not as convinced. I mean, it doesn't have the historical precedent of being wealth. It's more of an industrial metal, and but there's a real, that ratio, that mathematical aspect of it is certainly saying platinum's way undervalued. So yeah, I mean, if you have a lot of gold and you wanted to trade a little bit for platinum, it wouldn't be the silliest thing you ever did. But you look at gold's appreciation versus platinum's, and it's hard for me to get overly excited by platinum, but I think everyone should own a little bit, and trading a few ounces of gold for it's not the worst idea. I think there's better value trading gold to silver, but it's along those same lines, and the logic behind it is very sound. And the only way you can manipulate a market over an extended period of time is to push it in the direction it's going. And now the whole world is keen on accumulating silver and other strategic commodities, so it will. It's just been that for our whole lifetime, no one wanted to buy anything in this country, or no one wanted to buy commodities, and everything in this country was, they wanted to buy securities, they wanted to buy real estate, they wanted to buy treasuries, they didn't want to buy gold and silver, and well, that's changing. And as that changes, the ability to suppress it, especially naked suppress it, as you can see by the strain on the LBMA, is becoming extraordinary. So it will. And it's like a beach ball you try to hold underwater and push it down further and further. The pressure goes higher and higher and stronger to snap your face off as it comes up. So it will. I think it will extraordinarily accentuate itself. But, you know, it gets tiring saying that all the time and it doesn't happen. It doesn't mean I don't believe it. It just means that the people who've been playing this game have a lot more ammunition and a lot more power and political clout maybe than we all gave them credit for. But the rest of the world has found a way to exploit that by standing for delivery, and that's why it's changing. So before it's all said and done, if you have strong enough fingertips and you can hang on, you will see silver, I think, outperform even your own expectations. I do believe that. It's been a long game. It's been frustrating, but the logic behind it, the mathematics behind it, even the technicals behind it would say that's exactly what is coming.